Good morning, everybody. Mike Vacchi here with PrincetonTrader.com with your Monday morning pre-market webcast. Well, I was never gone, but I'm back. I haven't been doing the webcast for a couple months now. I've really been concentrating on the subscribers in the chat room and trading these crazy markets every day. And I mean, honestly, I really needed a break from doing this every day for about 5 years. But I miss doing it. I love doing it. And so I'm back doing it. So we'll be doing these every morning again. We added a new briefing report to go with the pivots that I have been putting out every day forever. And that's going to have, the pivot table and some commentary from me and typically a chart. So anyway, I'm back on your timeline every day. So away we go. Here's a daily chart of the ES. This is the same chart that I posted last night, yesterday before we opened back up. And what I was looking for is what we got. We got a moderate gap higher. They took it higher in the overnight. But what's potentially important about this is so far they haven't been able to take out the Friday high. So you've got I called the chart a lay of the land because you guys haven't heard from me for a while. So here's what we've got. You've got an 81.82 floor. I call this the first one because it's 1981.82. That was established here. Okay. When they broke it back above after being at the third standard deviation lower band for the second day, when they broke it above the lower band, they caught the bears leaning too far short, looking for much lower. The lower band ride failed, broke back above, and headed up towards all these moving averages. You got the 9-day, you got the 50-day, you got the mid-band, 200, 100. It made a high 0475, then pulled back, bounced off the moving averages, made what could have been a lower high. This was the real moment there on July the 7th. Could have been a lower high, came back, ended up making matching lows and establishing a second floor at 2081.5. And then it launched in what was a very nasty 6-day rally. Okay. The 6 consecutive sessions of higher highs, that was broken on Friday. 68 high Thursday. Friday's high was 64.75. So one of the things I'm looking at today is, does 64.75 survive the day? If it does, then that's an opportunity for the market to start to pull back in a meaningful way. Now, the market isn't going anywhere on a longer term time frame until it breaks back below the daily mid-band and converts it to resistance. Here's a 15-minute chart of the last couple of days. Here's your 68 high on Thursday. Friday's high is here. They did a nice little sell-off, pushed it up into the close, and then the whole turkey thing happened. We do a reaction low down in the 43s. Last night we gap up because the turkey thing didn't play out the way people had thought over the weekend, which is why I have a very tough time. I have a tough time shorting in the whole ever as it is. You can't short reaction news at the tail end of a weekend when you've got to sit there and hold it short. You're basically banking on an overthrow of the Turkish government, which, okay, but more often than not, that's not going to work out, and you're going to end up in the situation that a lot of people found themselves in at 6:01 in the morning, at 6:01 at night on Sunday, which is getting smoked by about 10 handles. So they squeezed them up into the 60s. They found some support down in the 53, 54 area, and then they did what I was wondering about. There's potential. Okay, there's that word potential lower high versus the Friday high, and they're trying to push it down. None of this matters until they can, first of all, take out the reaction low. Okay. And a good guidepost as to whether or not this is actually going to play out would be for the bears to take out weekly pivot here, 47.80. You're going to see some different weekly pivots this week. 47.80 is close by the calculations that we typically use, but the fact that the settle time and the whole turkey thing happened, depending on how people calculate theirs, I mean, you can have it down in the 43, 44 area as well. Just understand that 44 to 47 is going to be a huge support zone, and if the bulls establish that weekly pivot support zone early in the week, it's a springboard for them to move prices higher. And in that situation, I don't think 2168 really has a chance of surviving. On the other hand, if they can convert 44 to 47 to resistance, then they can head back down towards the 9-day simple moving average, potentially the mid band on the daily, and try to engage some lower prices. But understand this: in a vacuum, this market wants to go up, and you have to respect that. And until it starts to knock you out of trades, you have to be in buy dips mode. Okay, that's all I've got. Everybody have a great day. Follow us on Twitter at Princeton Trader. Come check out the website. Come check out the new briefing report. Come check out the chart of the day. And feel free to come check out the chat room. I've been there 24/7 forever, and great bunch of people, great group of traders, and come trade these markets with us. I'll be back tomorrow morning with another webcast. Trade them well, everybody.